Shadow banking. These two words are seldom used in the vocabulary of retail investors, and yet they are the most invisible powers that capture the strength of the market. When we say market, we look at something like Nifty, Nasdaq, etc., and then say that okay, today the market is stable, market is going up, market is in a channel. But did you know that if there is any kind of a fluctuation that can take place in this shadow banking, that realm which is totally opaque and has transactions close to around $10 trillion daily, and it is in this realm, if there is a crack that were to take place, that you'll see the entire world's market crashing. This has happened time and again in regular intervals, and the reason for this crash and what exactly is shadow banking is a science in itself. Stay tuned.
What if I told you there's a hidden financial system moving trillions of dollars around the world every single day? It's the secret engine powering some of the world's biggest companies, but it operates almost entirely in the shadows. Now, it's not illegal or anything like that, it's just invisible. Today, we're going to pull back the curtain on this world of shadow banking.
So where do we even begin with something that's, well, hidden by design? I think the best place to start is to get a sense of its scale. And trust me, the numbers are just mind-boggling.
Yeah, you heard that right. $10 trillion. That's how much money moves through this hidden network every single day. Just to put that into perspective, that's more than the daily economic output of almost every country on Earth combined. We're not just talking about some niche market here, we're talking about a whole parallel financial universe hiding in plain sight.
So, that begs the question, right? What exactly is this system? And if it's so gigantic, how on earth does it stay invisible? You know, to really get why this all matters, let's step away from the huge abstract numbers and look at a simple, real-world problem.
Forget trillions for a second. Let's talk about $10 million. We're going to see how this invisible system solves a very common, very real problem for a big company. So, let's meet a company, we'll call them Reliance. They need to pay a supplier $10 million for some new equipment, and they need that cash like yesterday. But here's the thing, it's not like they're broke. They know in just 2 months, a bunch of huge payments from customers are going to hit their account. It's just a simple timing gap. They just need a quick loan to bridge them over. So, you'd think, just go to a bank, right? Well, not so fast. For a short-term need like this, a traditional bank is a total nightmare. It's slow, it's clunky, there are mountains of paperwork, committees, you know the drill. But luckily for them, there's another option, one that's faster, cheaper, and works completely outside that old-school system. And that's the shadow banking route.
Okay, so how does this faster, better solution actually work? This is where we get to peek behind the curtain and see the gears of this invisible machine really start to turn.
All right, here's the magic trick. Reliance isn't going to borrow money in the way we think about it. Nope. Instead, they're going to use valuable assets they already own. We're talking high-quality bonds, stocks, whatever, and just temporarily swap them for cash. It's a totally different way to get money when you need it. So, check this out. Reliance goes to a huge global investment fund and basically says, hey, hold on to these super safe assets for us for 2 months. In return, just slide us $10 million. The fund agrees, and they do a clean swap. It's almost like they're renting cash. Reliance gets the money, pays its supplier, and business carries on. Then 2 months later, those customer payments come in, they give the $10 million back, they get their assets back, and the entire transaction, poof, it vanishes, like it never even happened. And that poof, that disappearing act, that is the absolute key to understanding why we call it shadow banking. It's not about being illegal or shady. It's about being systematically, almost perfectly, invisible to the outside world.
The first and maybe most important reason is this. At no point in that whole process was a traditional bank loan ever actually created.
I mean, think about the difference. A normal loan from a bank is visible. It shows up on their balance sheet. Regulators make them set aside capital just in case. It gets reported. There's a paper trail. But this shadow transaction, it has none of that. It's a private deal that never hits an official loan book. It's completely off balance sheet. It's a ghost.
All right, reason number 2, it stays invisible, is just its nature. This isn't happening on some public stock exchange for the whole world to see. It's a private, one-on-one deal. And think about what that means. The deal is struck directly between Reliance and that global fund. There's no public order book, no flashing price ticker on a screen. Only those two parties know the exact amount, the specific assets used as collateral, and all the fine print. So if you're a regulator trying to watch the markets, you are completely blind to this. You see nothing. Zip.
And finally, reason number 3 gets to the very foundation of how this whole system is built. And it all comes down to one word: trust. But it's a completely different kind of trust than the one your local bank runs on.
It's called asset-based trust. See, the lender gives over the cash not because they trust the borrower's credit rating, but because they are physically holding valuable assets as security. The trust is in the collateral, the stuff. And this is a crucial point. It means there are no regular depositors, no government insurance, and absolutely no public safety net if things go sideways.
And that, my friends, brings us to the twist. Because for all its incredible efficiency and speed, this system has a hidden and very, very sudden weakness.
This whole elegant system of asset-based trust is amazing, as long as the markets are calm, as long as everyone agrees that the assets being swapped are valuable. But the moment panic hits, that trust just evaporates, and the entire foundation of the system starts to crack.
Does that pattern feel a little familiar? It should. Think about the biggest financial shocks we've seen: the 2008 crisis, the sudden market crash in 2020, the turmoil in 2022. Every single one felt like it came out of a clear blue sky. One day things were totally fine, and the next, the entire system was on the verge of collapse. Well, that suddenness, that's not an accident.
And this is it. If you take away one thing about the risk, this is it. A traditional bank might show signs of getting sick for months. You can see the stress building. But the shadow banking system, it shows no stress at all. It looks perfectly healthy, right up until the moment it breaks. The risk appears instantly, all at once, the second the collateral everyone was trusting is suddenly in doubt.
Okay, so let's tie all of this together. What's the one big takeaway you should have in your back pocket? Here's the bottom line. Shadow banking is how massive amounts of credit get created, greasing the wheels of global business, but without using traditional banks, insured deposits, or visible loans. It's all private, and it's all based on collateral. As long as everyone believes that collateral has value, the system looks perfectly calm. But the second they don't, the risk explodes into view.
And really, that's the whole story. It's credit creation happening off the books. And that is precisely why it remains invisible to pretty much all of us, right up until the moment it breaks. It's the silent, hidden engine of modern finance, and it comes with a very sudden off switch.